Hello. So this morning we're going to talk about the Isle of Man economic substance rules, which were introduced in January 2019. They cause a little bit of confusion, and they have done since they were introduced. They're now part of our Income Tax Act under under Part 6A, and a lot of people misunderstand where they're relevant and where they're not relevant. So what I'm going to try and do is give you a brief overview, but the legislation is in the description below, so you can read it for yourself, and also there's a link to a blog article I wrote about it. So let's jump straight into it. Well, the first thing to remember with the economic substance rules is, firstly, they're relevant to entities that are tax resident in the Isle of Man. So if you're in a situation where your company is Isle of Man but not tax resident here, which it can be, not very often, under Section 2N of the Income Tax Act, then not relevant, so don't worry about that. The second point to remember, again very important, if there's no income arising to the company during the period, then the rules are not relevant. And by income arising, it doesn't mean cash in the bank. What it actually means is even if there's an accrual. So if you've got, let's say, an interest charge, and interest is payable, even if it's not received, then that will still count as income arising. But if there's no income arising, say there's no dividends or there's no income that's relevant, then the economic substance rules do not apply, so you don't have to worry about them, basically. The third test is the most important one and the one which causes the most confusion, and that is basically in connection with relevant sectors. So it's important to note that the substance rules don't apply to all sectors. So if you're a normal trading company, for example, if you're a consulting business, if you own property and receive rents, if you do anything that isn't a prescribed relevant sector, then your company isn't subject to them anyway. So the obvious thing to do then is to look at what are the relevant sectors so we can see where we might get tripped up by them. So let's quickly run through those. Okay, so banking. So banks are a relevant sector. Not relevant to 99.9% of clients since they don't own banks, and there's only 10 banking licenses issued in the Isle of Man at the moment anyway, but banks are a relevant sector. Insurance companies are a relevant sector. Again, very unlikely that you'll own an insurance company in the Isle of Man, and if you do, for regulatory reasons, you're going to need to have substance here anyway, so again, not really an issue. Fund management companies, not the fund vehicles themselves, but the actual companies which fund administrators and so on. Similarly, very unlikely that you'll be able to do that without having substance on the island, because the FSA, our regulator, won't let you do that. Shipping companies. There's 9 of these, by the way, so we're on number 4 now. This means commercial shipping businesses, so it excludes super yachts and fishing boats and anything else that's smaller than 24 meters. So that is relevant. There's quite a lot of shipping owned through the Isle of Man, but it tends to be concentrated in particular firms, and pretty much it's very likely that those firms would provide the necessary substance. So it's a more likely category, but it's still not very often come across. Headquartering. So this is where this is effectively for internal management charges, where strategy and coordination type services are provided to group entities, and that's charged for. So you need to basically, it's to stop profits erosion essentially. So again, not particularly common. Distribution and service centres, this is number 6. This is where goods are purchased from a group company and resold for a percentage profit to another group company, or goods or services. And so again, that is a sort of transfer pricing, to avoid sort of transfer pricing and dropping profits off in a low tax jurisdiction. And again, not particularly common. The next one is financing and leasing, and this is very common, probably the most common. So this is where basically a company has interest income. So if you are an Isle of Man company and you are receiving interest income because you made a loan to another party, then that interest income is finance and leasing income, and so similarly, if you've leased something to them, to another party, then you need to comply with the economic substance rule. So keep that in mind, and we'll come back to exactly what that's going to mean a little bit later. Holding companies. So this is not investment companies. So this is where you own a majority stake in another company and you receive interest. So again, that is quite a common scenario. So we're going to come back to that. And the final one is IP companies and high-risk IP companies. So this is where income is generated through holding intellectual property. So it might be a royalty fee for some copyrighted material or for a patent or something of that nature. It's a little bit of a grey area as to what IP income is, but we're not going to go into the nuances of that now. But the Isle of Man isn't such a great place for IP companies anyway, because we don't have a great range of double tax agreements. So if you're in a high tax jurisdiction, you're probably going to have a withholding tax if you try to pay a royalty to an Isle of Man company anyway. So you'd probably structure it through somewhere else like the Netherlands or Hungary or even the UK. So not such a common problem, really. So basically, the two main categories that people tend to come across are finance and leasing, which is the interest income, and also holding companies. Holding companies are a little bit easier because there's a bit of a carve out. So holding companies don't have to comply with all of the rules, actually. So for holding companies, you don't need to have regular board meetings on the island. You simply need to have sufficient nexus locally to be able to administer the entities that you are holding or that the company is holding. So holding companies are not so much of a problem. Maybe just appointing a local company secretary would be sufficient. But obviously it depends a little bit on the scale. If you've got 100 subsidiaries, then clearly you're going to need quite a lot of local presence to be able to administer those. Financing and leasing and all the other categories, what you have to do basically is to show that the core income generating activities are being undertaken in or from the island. And so it's a dual test, really. Firstly, you do have to have board meetings, and there's some guidance on this. I'll put that in the link below. But typically, you're going to have probably 3 board meetings a year here on the island. And at those board meetings, you need to demonstrate that the core income generating activities are being undertaken here. So in the case of a financing and leasing company, that's likely to be things like determining interest rates, making sure that interest is being paid on time, and looking at sort of general strategies in connection with that. Again, we need to look really at the guidance, which I've put in the link below, and also in the legislation, to see exactly what the core income generating activities are, and therefore what you need to maintain here on the island. So in summary, that is a very brief overview of the rules. So the most important points to remember is, firstly, it's never relevant if there's no income, and secondly, it's not relevant to every sector, and the most common sectors that people are likely to come across are both the holding companies, where you're receiving dividends, and the finance and leasing situation, where you're receiving interest income. Anyway, if you have any questions about this, feel free to drop me a line, and I hope that was useful.